Hey, good morning, everyone. This is Ray Valley here, the president of Combined Benefits United. I'd like to welcome you to today's training, the best life and annuity training in the industry, period. We are absolutely ecstatic today to be able to really formally roll out the new relationship between Combined Benefits United and the country's premier life and annuity trainer, Mr. Van Mueller, MDRT top of the table qualifier for 26 consecutive years. Yes, that's right, people. MDRT top of the table qualifier, 26 consecutive years, which is, you're talking half of a percent of the people in this industry that have really attain that lofty goal. So, as I said, my name is Ray Valley. I'm the president here of Combined Benefits United. We're a FMO located in Hollowell, Maine. Basically, our job is to bring systems and training to many of our business partners to be able to help them reach the level that they aspire in this great business, to be able to enhance some of the things that they're already doing within their practice. And in this particular case, to give them access to a professional in our industry to be able on a monthly basis through webinars and also on a very frequent basis across the country, meeting with a number of our business partners and advisors to help you build your practice to where you want it to go. So, without any further ado, I'd like to introduce Mr. Van Mueller. And today, the subject is going to be the basics of life insurance and really what motivates people to buy. So, Van, you're on the line, and I want to welcome you to CBU and these wonderful group of people that we work with every single day.
Thank you so much. I'm very excited to do this. If it's okay with everybody, I'd like to start by apologizing. There was a glitch on my end. It'll never happen again. We've corrected it. This was supposed to be on at 7:30 Central, 8:30 Eastern time, so we're recording it because we want to make sure that everybody has access to this information. Again, please forgive my error, and I'll work really hard to make it up to you by sharing as much information that will help you with your careers as possible. Just want to point out a couple of things. We are going to continue to do these webinars going forward. So September 13th, we will do another webinar. October 11th, we will do another webinar. November 8th, we will do another webinar, and December 13th. Please tell all your friends, anybody who's in the industry, who's really looking for a way to increase their production, help the American people during what I think is going to be a pretty serious economic disaster. And none of it is bad news. It's only news. If you plan and prepare for something, it's an opportunity. If you don't plan and prepare for something, you can be harmed by it. These webinars will be 8:30 a.m. to 9:30 a.m. Eastern Daylight Time, 7:30 Central Time, and please, I work very hard for these, and I'll make sure that they're valuable. One additional thing. I will be in Portland, Maine in person next week, August 19th, if you're in the vicinity. If you are not a member of CBU, please get there. We can help you. We can help you increase your production. We can help you get more appointments. We can show you what to say to inspire people to take action. Ray and Combined Benefits United works very, very hard to make sure that agents have the tools they need to be successful. That's why I'm so excited about doing this. So again, please remember, if you're in the vicinity or you can get there, August 19th, next week, I will be there in person, and he allows me to do several hours of training, and I'll have lots of stuff that will be important for what's going forward. And the thing that, again, to be repetitive, these webinars, September 13th, put it in your calendar, October 11th, November 8th, December 13th, and even people who are not members of Combined Benefit United should be attending these webinars. I promise I will have information that will be pertinent to the time that we hold these webinars, so it'll be valuable and timely and help you have the success you're looking for. A couple of parameters for this. What we're going to do here today is we're going to give you several prospecting tips. We're going to show you why so many people don't sell life insurance and how you can easily sell life insurance. And then we want you to try to use these ideas, because the secret of success is to take new ideas and use them as quickly as possible and make them your own. And so at next week's August 19th meeting, we're going to have a contest, and whoever calls Ray or Juliet at Combined Benefits United and tells them how they used one of these ideas, whichever one is judged to be the best story, and help them make a sale or help them get an appointment that they never would have gotten, we will pay them $100, and you do not have to attend to win this. You just have to make sure that you call Ray or Juliet at Combined Benefit United and make sure that they know this, and you're going to be very, very pleased. So let's get to the webinar. Again, one more time, my apologies. This will never happen again. It was Ray and I are just starting this, and I had a glitch on my end. It is fixed. It will never happen again. Okay? So let's get going. This is really, really important. One of the biggest problems with selling life insurance is that people sell policies. People do not buy policies. And so if you want success in insurance sales, then you have to stop selling products. You have to help people find solutions to their problems. They do not buy life insurance because you have a good policy. There's no way to ascertain it. In fact, I'll be very clear with you. I've been giving speeches for now 25 years solid, and at many of the speeches I make an offer to anybody who can prove to me that they have the best life insurance policy in America. Wait for it, everybody. Wait for it. 10 years from now. There's no way to ascertain that because we don't know what the interest rates are going to be. We don't know what life expectancy is going to be. We don't know what companies are going to earn or not earn. And so it's a ridiculous effort to try and tell somebody you have the best policy. What is important is that you show them that you know how to help them use any life insurance that they take a look at to the best of their ability, meaning that they use the features and benefits of these products to maybe avoid taxes, to leverage losses in stock market, to leverage losses in other investments, to be sure that you don't, that you're able to offset 0% interest rates, that you're able to offset not being able to earn anything for retirement. One of the sales ideas that we'll be working on next week when I visit in person and in future webinar is we're going to show you how to provide probably double the amount of retirement income that you could receive using only, let's say this again, using only the guarantees of life insurance and an annuity. In combination, you can double probably any other safe money retirement they could get. And so that's the kind of thing that you want to make sure that you have at your disposal with what's about to happen in our country and in our world. Now, this is really important, and it took me a very long time to learn this, and I'm going to say it twice because I want to make sure that we all get it. People don't buy life insurance when they understand it. They buy life insurance when they feel understood about what they're trying to accomplish. They don't really care what kind of a product you use as long as it solves their goals, as long as it meets their requirements. That's what they're trying to understand. They want to make sure that they have the opportunity to take advantage of a world that becomes increasingly difficult to understand. One of the things that I want to make sure everybody knows is that as long as I've been doing this, even I find that there's some things that I have misunderstood. I'm writing about it in both my newsletter and my column about the fact that I visited with several clients, and they told me how concerned they were about what was going on with their retirement goals. And I said, haven't I visited you enough? Haven't I explained enough? And they said, they actually apologized to me. They said, it's not really about you. It's just there's so many new things going on that we don't understand, that we don't feel comfortable about, that we're really becoming more and more worried. In fact, these were two clients who have been with me for 25 years. Both had more than $500,000 in assets over and above their primary residence, and they were actually disclosing to me that they felt like not only was it getting possible that they would have to delay their retirements, both of them admitted to me that based on what they were hearing in the news, that they would actually never get to retire. And then when I'm going to explain what I then did with that information, I actually had some of my other clients say that they might actually have to go back to work after having retired because of all the things that were happening. So it's very, very, very important that you understand that even people like me who work very hard to make sure I share tons of information, it is important that you ask your clients how they're feeling. Not what they know, but how they're feeling. Do they believe they can retire? Are they worried about things like negative interest rates? 1/3 of the planet is now paying negative interest rates on what are called sovereign government bonds. A United States Treasury is a sovereign government bond. There are actual countries, Japan, Germany, that they do not issue one single bond that is not paying a negative interest rate. It's astonishing information. So how would you retire if you earn negative interest rates the rest of your life and the safest investments you could put your money into? It'd be pretty difficult. And what if the stock market really does finally crash? More and more evidence is coming out that if you go to www.usdebtclock.org, it shows that just since 2000, we have increased the money supply by over 5 times. By over 5 times. That has never happened before. And so much of the gain of the stock market has come from increased liquidity provided by printing of money. And now another 40% of the gain has come from what are called stock buybacks, companies buying back their own stocks. And what's very important about that is that now those stock buybacks, the companies are actually using debt to do those stock buybacks. This is getting more and more dangerous. Now, I know what you're thinking, and I have to set this up. What does this have to do with life insurance? It has everything to do with life insurance. The sale of life insurance has nothing to do with the product. The sale of life insurance has everything to do with what it can do for people. And life insurance is the key to making sure that your people still have a chance to have successful retirements, that they can still keep money in the family rather than giving money to governments, nursing homes, and hospitals. And you want to keep asking them over and over and over again, you know, what is it that you're looking for? What do you want to do? How do you feel? Are you worried? And boy, was I astonished. I'm not kidding you. I actually called many of my clients and explained my meetings with these two clients. And they said, boy, we're really glad you called. Thank you so much. It actually benefited me, but overwhelmingly they were feeling the same way. Were they going to be able to retire? Were they going to be able to meet their financial goals? were they going to successfully be able to build money for the future? They were really, 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 really worried about it. And so I want to make sure that you understand before we start this journey talking about life insurance that you really understand it is one of the great opportunities of a lifetime if you are an insurance and financial professional. Insurance, it's finally their time. Insurance is the use of leverage, pennies that buy dollars. $1 that can do the work of many dollars. That's what life insurance is. Life insurance takes care of you if you live too long. It takes care of your family if you die too soon. It is self-completing if you become disabled. It has catastrophic illness benefits. If you have a heart attack, stroke, or cancer, you, in some contracts, are able to access some of your death benefit if you have one of those occurrences before you die. They have terminal illness benefits on insurance policies now, meaning that if for a lifetime most of the money or financial stuff was handled by the person that's dying, because they have a terminal illness, they can actually access the money before they die and help get it situated so that a prospect or client will be able to be okay after the primary organizer of that money has been deceased. And finally, and I was saying this for 10 years, it was the insurance industry that figured out a way to still provide long-term care benefits, the hardest benefit to provide, using the death benefit from life insurance policies. It is an astonishing benefit because more and more companies are going out of the long-term care business because it's almost impossible to price one of those policies, or they're shortening the span of the payout even to 1 or 2 years, and even that, they're not able to understand what the cost of delivering those benefits is. And with the cost of long-term care increasing, please listen, this is really important. If a nursing home cost right now is $100,000 to $125,000 a year, in just 12 years, and I'll tell you why that's an important piece of information, in just 12 years it'll be $200,000 to $250,000 a year to be in the nursing home at just 6% health cost inflation. 6%. Now, why is that a big deal? Because 12 years from now, the bulk of the baby boomers will have retired. The baby boomers' biggest numbers of retirement are the year 2022 to 2029. And so if you add 12 years to now, that means by that time we'll have an onslaught of people over the age of 65 who will start to need these benefits, and the cost will go up dramatically because there will be less and less people that will be able to care for these people. And again, who thought of a way to transition? The life insurance industry. Life insurance, not investing, not anything else, insurance. Because of those leveraged dollars, they will be able to use some of those leveraged dollars in life to pay for long-term care. I can't tell you enough how important of a benefit this is going to be going forward for the American people. You really want to know how to use this. The first idea that we're going to give today, so simple, ridiculous. You will sell so much life insurance, and they won't be buying life insurance. They will be buying what life insurance can do for them and their families once we get to it. So I want you to understand it's the most exciting time ever to be a life insurance agent. There's never been a time like this. There's never been a need like this. There has never been a product so perfectly designed to be able to deal with what we're all going to have to deal with going forward. Most of the care given will be to people needing long-term care will be given by family caregivers. And I can tell you numbers and numbers and numbers of situations where the caregiver actually died before the person receiving care because they're so exhausted. Again, having these life insurance benefits helping to pay for long-term care could save many a family. And see, again, if you're understanding, you'll notice I'm not talking very much about cash values or premiums or death benefits. What I'm talking about over and over and over again is what it will do for people, how it will make sure that they can stay in control of their financial futures, how it will prevent from being destroyed families' emotional and intellectual and spiritual and physical stability. We can do amazing things. So I want to get started. I just want to read you a couple of more important things, and you need to write these down. You need to know these, and the reason you do is because these are the kind of statistics that make it important to use life insurance to the best of your ability. Please listen to this. I can remember when you could put $350,000 into safe government bonds and collect a guaranteed income of $50,000 a year. This is in my lifetime, my insurance lifetime, not my, I'm talking about 1980, 1981, 1982. Today, in order to see $50,000 in guaranteed annual income, you have to put $2 million into 30-year U.S. Treasuries. You have to put $2.5 million into a typical bank CD, or you have to put $4.5 million into a standard savings account just to generate $50,000 a year of income. It's an astonishing amount of money. Let me say it again. $2 million into 30-year U.S. Treasuries, $2.5 million into a typical bank CD, or $4.5 million in a standard savings account to generate $50,000 a year of income without touching that money, without ever touching the principal. It's an astonishing amount of money that 99% of America will not be able to come up with, and $50,000 a year is not an astonishingly large income. Now, I'm going to tell you that if you use life insurance and an annuity, you can accomplish the same goal with much, much less amounts of money. And that's some of the things that we will be talking about in the future seminars and at the in-person meetings that we will have. Again, I will be in Portland, Maine next week on Friday for the meeting. I'm just checking again because I did a glitch before and I don't want to do another glitch. I just want to make absolutely sure that I'm all telling you all the exact date because I really want you to be there, and I am correct. It is Friday, August 19th. I will be in Portland, Maine. Please come. We have so many great new ideas to share with you. Even if you're not a member of CBU, we would like you to become a member because then I can help train you, give you the tools you need to increase your production, and there's nobody that will work harder at putting in front of you every kind of workshop, every kind of opportunity. There's people to help you sell Medicare, Medicare supplements, all kinds of things that will be of benefit to you. Ray and his people work exceedingly hard to give you all the tools that you need, and please consider me one of those tools going forward. One more thing, and then I'm going to get to some questions that I want you to ask. And please remember, to those people who use some of these questions and get appointments and maybe even make a sale, and I don't see why you wouldn't, if you call to Ray or Juliet and you tell them what you've done, you have a chance to win $100 that will be announced at next week's meeting. And I'm telling you, you'll be so pleased. You really won't care about the $100 because you'll make thousands and thousands of dollars. But, you know, I'm competitive, so I would like to have the best idea at that meeting. One more thing I want to read to you, and I'm going to, please, you really have to understand why it's important to sell life insurance. This is so off the wall you won't understand, but I need you to get this. The mortality tables say the life expectancy of a male in the year 2000 was 85.4 years. The life expectancy of a male using the new 2012 tables is 88.5 years. For a female in 2000, it was 88 years life expectancy, and for a female using the 2012 table, it's 90.3 years old. And listen to this, really important reason to stay married if there ever was one. In 2000, the joint life expectancy was 92.1 years, and now using the 2012 mortality table, it's 94.7 years. Now, this is really, really important. Talking about a male insured, the insurance company now needs to account for income that will last an additional 3.1 years. That's over 37 months of additional income from an annuity or the cash value of a life insurance policy. What I'm begging you to understand is that there needs to be a sense of urgency on your part before they change these mortality tables. I know I just read you the 2012, but it has not been fully approved by the Internal Revenue Service yet, and so most of these companies are still using the 2000 tables, which means that if they annuitize the contracts, they will get a higher payout at retirement. It is very important that you understand that. You should be racing around selling annuities and cash value life insurance like crazy because the payouts are based on 2000 mortality tables. The flip side of that is that if people are living longer, who's the only people? Insurance agents, not investors, not advisors, not people who invest in real estate. None of these people can guarantee to pay the additional time that is coming to fruition for people who are living longer. Only an insurance agent can. Only an insurance agent can pay guaranteed income for as long as you live. It is so very, very important. Now, there's also a good news to when the 2012 mortality rates come in. Here's the good news. If people are living longer, the cost of insurance will go down. That's the only good news. Because we're more interested in the payouts will go down also the longer people live. So I would try like crazy to get everybody you know to buy an annuity, to buy a cash value life insurance policy now, because they are still being based on the 2000 mortality tables, not the 2012 mortality tables that are about to be improved by the Internal Revenue Service. So I hope that's a good setup. I want you to understand it is, one more thing. Let me ask you something. If people have $1 million life insurance policy, okay, let's take $1 million, make it easy, and they're used to living on $100,000 a year, and the breadwinner dies at 50 years old, okay, 50. And they're used to living on $100,000 a year. And if the interest rates are paying zero, how many years before that $1 million is gone? And the answer is correct, 10 years. They wouldn't even make it to barely a time when they could take the minimum Social Security, which was absolutely not set. And that's the widow's age 60, where that widow can start taking Social Security. They would never be able to approach that $100,000 number again. And so what you need to understand is these low interest rates also require you to go back and ask everybody, will life insurance that they already have pay the incomes that they were planning on if the interest rates stay low? There's an article. I'm going to read you the title of it. I'll say it twice slow. It's in Forbes magazine, and it's written by John Maldine. He's amazing, very thorough researcher from Maldine Economics. You really have to get this information because it's very dangerous. Here's the title. Expect around 0% returns for the next 7 years. Expect around 0% returns for the next 7 years. I'm going to say it once more. Expect around 0% returns for the next 7 years. It is absolutely important that you know that. You can Google that and then you'll get the article from Forbes. We've already had 0% interest rates since 2007. That's 9 years. If it goes another 7 years, that means it is entirely possible that we could have 0% interest rates for a generation. Think about that, a generation. And so it is very, very, very important that you understand and include life insurance as one of your financial pieces of the puzzle, because you have to make up for all those years of 0% returns. You have to show people how they can increase their retirements without harming their principal and without taking any undue risk. So, elevator talks. Those of you who know me, I'm going to give you only one old one, an original one, but I want you to understand you need to keep asking it, especially with what we think is about to happen. Do you believe there's going to be another financial crisis like there was in 2007 and 8? Just yes or no. And they'll say, yes, I believe. And please, out of the 100 times that you ask it, the 2 times that they say no, then you switch to a different question, okay? But if you could ask a question 100 times and 98 times you'd get the answer you were looking for, wouldn't you ask that question? So it's important. Ask the question. People are becoming more and more concerned. They're more and more worried. There's more and more uncertainty. So do you believe there's going to be another financial catastrophe like there was in 2007 and 8? Just yes or no. They'll say yes. Do you want to happen this time what happened the last time? Now, you don't ask them, did you lose money? Because if they'll answer right back, well, I made it back already. And then you're stuck. Then you have nowhere to go. What you want to do is you want to create intimacy with them without getting personal. And so you're not attacking them. You're not causing them to have to defend themselves by saying, may I ask you something? Do you want to happen this time what happened the last time? Now, you know that 99 out of 100 people lost money. But you're not asking it that way. You're asking a question that allows them to answer whatever way they want. But I'm telling you, 99 out of 100 times they're going to say, no, I don't want that to happen again. So then you simply transition and you say, so what are you going to do to make sure it doesn't happen? And this is really important. We don't understand why this happens, because at Combined Benefit United, all the people that we take care of, this never happens to. So this is an important question. Why do you keep using a strategy that you know isn't going to work? And they look at you funny for a minute and they say, well, you know, because I don't know anything else. And then you say, well, you know, what are you going to do? And they say, well, gosh, I don't know. So you're going to leave this happen to you again? And you keep asking them. If you'll notice, I'm not transitioning to any policy or anything, because the minute that I do that, they're going to think I'm a salesperson. I am not trying to build a salesperson relationship with them. I am trying to build a advocate, counselor, or advisor relationship with them. So until they say, my gosh, what do you think I should do? The minute they say that, they have just changed our relationship. I know it's a nuance to everybody. You think I'm being cute. I'm not. It literally changes agents' careers when they stop offering up products whenever they see an opening. If they just keep asking questions until the prospect or client says, oh my God, what should I do? That client has now given you permission to delve further into helping them solve their problems. It is such a key important technology. It is such a key important skill that you must learn as an insurance and financial advisor. It is really, really, really important. That's why I started with this, because you're going to see I'm going to go back to it several times in this situation. So that's one of the elevator talk. Here's one more. Many of you, because this is a life insurance meeting, you see couples with young children. Don't be afraid. Say, you know, I work for Combined Benefit United, and it just always drives us crazy because we see lovely families like yours, and we're so worried that somebody's never asked you this question. It'll take 1 minute. Would you mind if I... See, you set it up. You tell them who you are. I work for Combined Benefit United. It's one question. If you knew how many times I do that in a bar, in a restaurant, on the plane, standing on a street corner, I set it up. I have no problem saying I'm an insurance agent. None. I say, please. And in fact, watch this again. I'll even adjust it a little bit more. You see a couple with a couple of children, and you say, you know, I work for a company called Combined Benefit United, and we help people, and you have such a lovely family, and we just don't understand why people don't give considerations to certain things. Gosh, you'd really help me to understand. Help me, not them. You'd really help me to understand if you'd let me ask you one question. Here's the question. Do you think it's fair that when one parent dies and there's not enough money, the children should end up losing both their parents? Do you think that's fair? And they say, oh my God, you know, we never even thought of that. And they say, that's why we try to ask everybody that question. We just want to make sure that a lovely family like yours isn't harmed by some terrible catastrophe. So if you don't think you're situated in a good way, and with 0% interest rates, might that be possible? Would it be terrible to spend 45 minutes with me if there was no cost or obligation sometime in the next week or two? And all I'm going to do is ask you a few questions that will allow you to know whether you guys are going to be okay if something terrible like that ever happened. Would that be all right? And if you do it conversationally, if you ask it in such a nice way like that, and you make it less than an hour, always less than an hour, 45, sometimes I say 51 minutes, and they look at you funny, but it really gets their attention. You know, you use a number less than an hour, and you tell them the time frame. Now, here's a couple of more, and I want you to have 4 or 5 of these ideas before we get to the end of this webinar, because I want to make sure that you have questions that you can ask people. Again, Northwestern Mutual has their annual meeting here in Milwaukee, and so for those 4 or 5 days that they're here, I have breakfast, lunch, and dinner with tons of them, and I'm always joking around with them. So I'm on the street corner with an NML agent, and we're going to lunch, and I didn't feel like paying for lunch, so I said to the guy, hey, make a deal with me. If I can get an appointment with this guy, you got to buy lunch. And he said, man, you're on. See, I make it fun. It's fun. I'm just going up and having great conversations with people. And so I walk up to this guy, and they say, excuse me, my name's Van Mueller. I'm an insurance and financial advisor with Combined Benefits United. Doing this for a long time, and we're just so puzzled why people are allowing some of the bad things that happen to them. And you would really help me if I could ask you a few questions. And please, one of them is a question that's going to seem like it's from outer space, and another question is actually a trick question, and I'll warn you ahead of time. It's only take less than a minute. Would that be okay? And the guy said, yeah. He said, sure. I said, so here's the first question. Do you think there's going to be another financial catastrophe like there was in 2007 and 8? Just yes or no. And the guy goes, yeah. And I go, so let me ask you something. Do you recall that in 2007 and 8, 12 million people lost their jobs? 12 million people. And they believe that when this happens again, that's upwards of 20 million people will lose their jobs this time. Astonishing, isn't it? So here's the question from outer space. It's not going to make much sense to you. Ready? If you lost your job for 30 years, would that harm you and your family? And the guy goes, well, yeah, of course. And I said, now here's the trick question. You ready? I looked them right in the face and I said, isn't that retirement? And the guy, I mean, honest, I said, that's what we try to get people to understand is I just read you life expectancies, and it's very highly likely that people will live 30 years in retirement. I said, sir, here's the deal. In the last 30 years, we had 1987, we had 2000 to 2002, and we had 2007 and 8, but you were able to survive it because you were working. If you're retired, what would happen if we had those same three occurrences again? And wouldn't you want to know before they happen how to prevent yourself from being harmed by them, and maybe even how to take advantage of them? Please honest, if there's no cost or obligation, and it would take less than 45 minutes of your time, and all I'm going to do is ask you questions that will clarify in your mind how to go forward, wouldn't you want to know about this information? Couldn't you find some time in the next week or two? The guy said, yeah, and I got my free lunch. I do it all the time. The questions are meant to be fun and interesting, and you set them up. You don't be afraid. You say, look, you're helping me out. Here's another one really quick. Really, really important. You go up to people and you say, wow, you know, my name's Van Mueller. I work with Combined Benefit United, and I've been doing this for a really long time. And we're just astonished that people are going to allow to happen to them again what happened to them before. Gosh, you'd really help me if you could just answer a couple of questions. It'd take less than a minute. You'll really have fun with this. And they say, okay. I see, they'll really have fun with it. So they're kind of, geez, what could he ask me that I could really have fun with? Don't you see? That's the setup. Now they're willing to at least listen to a couple of questions. So then you say to them, hey, isn't it astonishing that you ever believe that we would say Hillary Clinton and Donald Trump running against each other for President of the United States? Isn't that astonishing? And everybody says yes. And you say, now, can I ask you, this is the most important question. Ready? Do you think Hillary Clinton running for president versus Donald Trump will create more certainty or more uncertainty going forward? And they almost start to laugh. And they say, well, of course, more uncertainty. And then you look them right in the face, dead serious, and you say, so you're going to let Donald Trump and Hillary Clinton take your money again? And they go, oh my God. And I say, what if there was actually a way to sew your pocket shut so that Donald Trump and Hillary Clinton could never get their hand in your pocket ever again? And better than that, the only people that could ever get their hand in your pocket from this day forward would be you, your family, and your business. Wouldn't that be valuable information? And if there was no cost or obligation, all I'm going to do is ask you some questions that will help you clarify in your mind how to make sure that you can be in control rather than have them in control. Wouldn't that be worth 45 minutes of your time sometime in the next 2 weeks? And they say, God, absolutely. And I got an appointment. Do you understand, everybody? I want you to be creative. The reason I'm telling you some of these other elevator talks is I want you to get in front of people. And the only way that you can do that is that you have to be interesting. You can't go and say, I got the best policy, they don't believe you. You can't say, I got the best interest rate, they don't believe you. You can't say, boy, I want to help you. They don't believe you. What's in it for you? That's what they want to know. And so by asking these questions, you take all of the focus off of you and you put it on the prospect or client. That's what allows this all to go forward. One more. Then we have time for the sales idea and a couple of important things that you need to know. But again, here's the thing. You walk up to people everywhere and you say, you know, my name is Van Mueller. I work with Combined Benefit United, and I've been doing this for 43 years. Now, you notice I've said it two ways. I've been doing it for a long time, or I've been doing it for 43 years. I want you to be very clear. Those of you that are new agents, less than a year in the business, never lie to anybody, never. You always get caught, always. So what you do is I want you to use words the way they need to be used. And here's what I mean. If you're a new agent and you've been sitting on the phone for 3.5 hours cold calling, it seems like a really long time. So if you say to them, I've been doing this for a long time, you're not lying. You're just saying what it feels like to you, and then you can move forward. But on this one, I'm going to use my time. I say, hi, my name's Van Mueller. I'm an insurance financial professional with Combined Benefits United. I've been doing this for 43 years. And I can't tell you, it just drives us crazy. We think there's another catastrophe about to happen, and we don't know why people allow themselves to be hurt, because that never happens with our people at CVU. See how you set that up? You're telling them about your agency without telling them about your organization. That's how you set it up. And then you say to them, this is going to drive you crazy. It's going to be such a silly question, but I bet you've experienced it. Ready? Where is it written in finance that you have to lose 30 or 50 or even 70% of your money in order to make money? Where's that written? Why do people continue to do that? Why do people wait until they get killed instead of understanding that if they don't lose any money and wait for stuff to be over and then take advantage of it, that they could be years and years ahead of where they are right now as far as their goal of reaching a successful retirement? See, that's what we're able to do with life insurance and annuities. We can guarantee that they won't lose any money. Then we can provide liquidity of various amounts based on whatever kinds of products we're using. And what you need to understand about the difference between life insurance and annuities, life insurance is actually more liquid than annuities are. You have access to the cash value, most of the cash value, at the most appropriate times to take advantage of opportunities. Selling life insurance is so spectacular right now, I don't even know where to begin. I could literally talk to you for 24 hours about this, and it's so misunderstood in the industry. Everybody thinks they're selling a product, and they're not. They're selling a solution based on pennies that buy dollars, and a dollar that does the work of many dollars at a time when people have less and less and less discretionary money available to them. So I want to prove to you something. I waited until we had approximately 8 minutes left. That's what we have left, is 8 minutes. And I want to make sure that you understand that I can do this sales presentation in less than 8 minutes. This is your one life insurance sales idea for this meeting. Please, there'll be many more at the continuation of these webinars, and I will be perfectly on time every time going forward. And please come and visit with us if you can next week Friday in Portland, Maine at the meeting, and I promise I will have additional sales ideas for you, but this one's so easy I can do it very quickly. So remember, the goal is to learn how to sell life insurance not as a product, but as a methodology to help people accomplish what they want to accomplish. Ready? I go and see this young lady, 71 years old, and that's what I called her, young lady. And she's got $300,000 in a money market account. And I asked her, I said, boy, that's just simply amazing that you have accomplished the ability to build $300,000. I said 95% of the people in America would trade places with you tomorrow. That's amazing. And she said, oh, well, you know, it's my husband who helped. They always transfer the accomplishment to somebody else. That's how that generation is. But I said, boy, that's amazing. You know, so I'm not even spending a minute talking about anything. I said, do you have any idea what that earned last year? And she said, no, I really don't. I don't pay much attention to it because I don't need it. Geez, I almost fell over myself. I said, is there any way to find out what it earned? And she said, yeah, could we look at the tax return or look at the annual statements? I said, you know what, that would be fabulous. Why don't you go get the last 5 years of your income tax returns and get your last 5 years of statements, and let's see if we can figure out what this thing made. And she said, fabulous, I'll go get it. She goes and gets it, and then $300,000, she was making $300 a year. $300. So over 5 years, her $300,000 had built to $301,500. She's made $1,500 in 5 years on $300,000. Astonishing. I said, ma'am, will you do me a favor? Pretend you never met me. See, we always do it backwards. I said, pretend you never met me, okay? So here's the deal. Let's say that you understand a very important premise. I have an article here, and I'll make it available when I come next week that was issued by also, again, Forbes, that shows during the last 3 years of your life, you spend more on health care than you do the entire rest of your life combined. So the last 3 years of your life are the most expensive. In those 3 years, you spend more on health care than you do the entire rest of your life. So I said, let's pretend you never met me, and you go into the nursing home the last 3 years of your life, and it's $80,000 a year plus your Social Security check every single year for 3 years in a row. And if you add that up, it's $240,000. You subtract the $240,000 from the $300,000, and when you die, even though you had complete control of where you were and you got the care that you thought you could get the best care for the money you were paying, your family only inherits $60,000. Now let's pretend you did meet me, okay? And we're going to take that same $300,000, instead of keeping it in a money market, we're going to transfer it to a cash value life insurance policy. And it's a single premium life insurance policy. So it's treated and taxed as if it's in a savings or an investment, okay? And it's going to buy you at 71 years old about $550,000 of face amount, of death benefit, okay? Now, let's spend the same last 3 years in the nursing home. $80,000 the first year plus your Social Security check, $80,000 the second plus your Social Security check, $80,000 the third year plus your Social Security check, and then you die. And here's the amazing thing about what you just did, one little simple thing. Instead of subtracting that $240,000 that you spent to go into the nursing home from the $300,000 you gave me, we will subtract the $240,000 from the $550,000 face amount of the policy. So you will still have the same exact care you had. You'll be able to pay for it exactly the way you paid for it. You'll be able to go wherever you want and use your money any way that you want. But your family at the end of this will still inherit $310,000 income tax free. Now, you know, if that's all there was, you should do this right now, but that's not all there is, because my plan doesn't have to go through probate. My plan is incontestable and private. My plan can be controlled from the grave. If you have spendthrift children, you can make sure that they get it as an income rather than as a lump sum. My plan has creditor and predator protection, and my plan has Medicaid versatility. I can turn it from a lump sum asset into an income stream and still possibly keep that money in the family if you were to spend a much longer time in the nursing home. I'm still not done. I said, ma'am, have I hurt you by putting that money in that policy? I mean, you're going to make the same, maybe even a little bit more than you would have had you kept the money in a money market. You'll still have access, but have I hurt you? And she said, well, I don't know what you mean. And I said, well, what's the best time to invest in the stock market or investments, when they're high or when they're low? And she said, well, come on, that's the first thing we ever were taught is when they're low. I said, well, when's that going to be exactly? She said, boy, I don't know. And I said, isn't that why everybody makes all the mistakes they make? She said, absolutely. I said, what if you could be in this cash value life insurance policy, make what you're making in the money market, have the $550,000 death benefit, but if all of a sudden the stock market crashed, you could go and take a temporary loan from your life insurance policy of, let's say, $200,000. You want to leave enough money in the policy because you never wanted it to be harmed. So you take out the $200,000, you invest it at the bottom of the stock market, you make $100,000 a gain, you pay the $200,000 loan back, and now you got $100,000. I looked at her and I said, ma'am, this is really important. This will tell me everything I need to know. If we were able to do that for you, what should we do with that $100,000? And she said, well, gosh, that's easy. Shouldn't we get another one of these policies? And I said, oh my God, you do understand exactly. That's exactly what we do. And I explained to her, I said, do you know, ma'am, I didn't tell her, I said, do you know, ma'am, that I have lots of ladies just like yourself who have 5, 6, 7 of these policies, because every time one of these events occurs, they're able to take advantage of it. Wouldn't that be amazing for you and your family? It's a way for you to stay in complete control of your money, but instead of giving the money to a government, a nursing home, or a hospital, you keep that money in your family for generations to come. Do you realize how you are? She said, oh my God, thank you very much. I really appreciate, I mean, she's thanking me for giving me $300,000 bucks. It didn't take long. I sell so many life insurance policies just like that, because remember, it can pay long-term care because you can private pay without the objection that most people have about long-term care, which is, what if I pay long-term care premiums for 20 years, let's say $8,000 a year, and I throw away $160,000? Well, guess what? You have a way to show them an alternative using cash value life insurance. It's exactly 1 hour since we started this conversation. Please, again, my apologies, and I hope you'll grant me this one faux pas of screwing up on my end as far as an issue that I had. The next meeting is, webinar is September 13th, again October 11th, again November 8th, and December 13th. These will always be at 8:30 Eastern Time. And next Friday, I will be in Portland, Maine, with lots more of these ideas. Please tell your friends. Please get them on these webinars. Please, if you want to expand your career and you want to do it quickly, get with Ray, get with Combined Benefits United, and make sure that you take advantage of the opportunity of a lifetime. Thanks, everybody.